Hey folks, welcome to this conversation. We want to talk about matters consumer banking. During the banking season FY 2023, all of you are asking me, where is this guy? Triple M, Musyoka, Moses Muthui, Consumer Banking Director at Absa Bank. Karibu sana.
Thank you, Julian. It's nice to see you off season.
Always a pleasure, Moses. Moses, consumer banking within the context of elevated credit risk in this market. How are you charting your path on that course?
Look, Julian, I think, first of all, thanks for having us. Real pleasure to talk to you about what we're doing in this space. I think there are certain global trends that bring this whole thing into context. The first is we've seen, banks globally positioning to either be scale players or niche players. Because truly there isn't a middle ground. If you're not differentiated as a scale player or a niche play, a middle-sized play is one where it's creating a binary world for banks around the world. And so on just that one trend, we've taken a strategic choice, and this has been evolving over time, to position the consumer business in Absa as a scale business. And we can go into the details around why we believe a universal banking, modern-day consumer financial services business of scale is of strategic importance to us as a firm. I think secondly, we are seeing the revenue pools mutating. About 45% of revenue pools in banking are around the consumer space or moving money around. Off balance sheet, not your lending and savings, it's just moving money around. And so the payment space and what we do in that space is quickly becoming the sharp end of banking and the sharp end of consumer banking. And I think finally, it's, consumer behavior has started to determine how finance is consumed. Today, any consumer walks to a store, whether it's a grocery store, a retail store, or even a bank, has 80% of the time interacted with the product online. And so leveraging our capabilities and platforms, being part of this revolution, and with core capabilities that we have as a bank, we think we are well positioned to build a truly scalable consumer business that complements what is a market-leading corporate and investment bank.
But Moses, to counter what you're saying around the scale play or niche play, skeptics would argue that when you look at the retail segment in this market, already they're market leaders. And for players like Absa, who are now, if I could say, recasting themselves as a retail bank, aren't you behind the curve when it comes to playing at scale?
Look, I think the bank has evolved in its strategic horizons. The 5 years leading up to 2022, and many conversations that we had were around change and transformation, rebranding, going through the transition period, very much inward focused in terms of ensuring that we're efficient. We've invested in the business. We've organized the business around its core capabilities. COVID happened. We went through that wave with everybody. Coming out into 2023 last year, we had to take a strategic tact around, we have leading market efficiency levels. When you look at our efficiency ratio, there's capital we can deploy to change and to grow the business and return some of that to shareholders, which you saw in our earnings season. The market space is ready. We have a brand we can reposition. And so when you look at the core capabilities we came out with, they put us in a very good stead on this next horizon, which is to build a modern-day business and to invest in it. They're incumbents, and we're one of the incumbents. We've been around for over 100 years, close to just over 500,000 30-day active customers. The market has 40 million people consuming financial services of different nature. We do not have any reservations around our ability to invest in distribution, omnipresent, to be omnipresent, not just physical, but digital distribution. We've looked at the brand as a real competitive advantage. And how we create sentiment with this brand for what it stands for will allow us to go after the scale we're looking out for. And it's an open market. And we think, when you look at us in that space of mid-sized bank that was fixing its core capabilities, now ready to take the charge, we're very optimistic. We'll begin to find our way into a real scalable consumer business in the market.
And still touching on scale then, Absa has had the reputation of one of the banks which has truly guarded its asset quality in this market. When you go to that segment of the market, which is the retail market, then you have to be very careful about how you calibrate your risk appetite. How do you play that?
Look, I think, and this is really the spanner in the works around what is the end game of banking. And
social contract, you like,
right? Precisely, right? And are we seeing an environment where most of where there's fortunes for banks is going to be around origination and distribution, right? Investments and insurance, micro mobile only financial services products that have high velocity, low capital, and less about term structured lending. 10-year loan unsecured in the environment as an example. And so I think is how we position in this environment to make sure that credit losses that are associated with mass retail banks do not come along as we execute the strategy. And I think at the end of the day, it's about ratios, and how you manage your portfolio ratios through the strategic horizon as you go about it. I think for us, consistency is important in terms of quality of our balance sheet, but there's a lot more to play outside the balance sheet. And indeed, we are seeing this space of mobile-only micro-financial services of high velocity. We're seeing transitory opportunities there. And where we do lending, because that's core. I mean, we're a bank. We can't say, now we are de-emphasizing. We just do it in a smart way. Is it picking ecosystems and being part of those ecosystems where you understand value chains horizontally and vertically, and so you're able to apply credit risk in a more considered way. So absolutely, it isn't a risk that is we're losing our sleep on as we go through this charge to scale the consumer business, but one where we will be considered.
You spoke about the issue of incumbency and presence. For banks who are playing in the retail space aggressively, one of the things which really works for them is physical presence. When you are going through the rebrand, one of the things you did as a bank was to rationalize your branch network.
Correct.
Are we likely to see you now reversing that because of the retail focus?
The places we are going now are not the spaces where we rationalized. If I think about a place we closed or branches we merged, we are going into new spaces. And truly speaking, branches are not going anywhere. The format and the use of those branches is what will change. When you go around the country, I've been to 25 branches since January 1st, 2nd, just trying to understudy in my new role how we are positioned in the market. And as you go from major town or a city, tracing our presence, you find the scale players in between, in real spaces where there's opportunity. And it's less so about just branches, it's agency, and we're working on something in due course that will bring our strategic clarity in that space. It's our digital distribution, right? It's embedded finance, it's being where people are. So I think the philosophy I have is, we have to invest in digital but don't leave branches on the wayside. And what we do with those branches is what will be critical. We find ourselves in the market in between, 85, probably getting to 100 or so thereabout very soon, in a market where the hyperscalers in terms of branch network are in the 200 mark and the niche players are in the 30, 40 mark. We only see a way up, and there are real market needs. I traveled from Eldoret to Kapsabet to Nandi Hills. In between, you see real market needs. I traveled from Migori to Homa Bay through the towns in between. In between, you see real needs. And so for us, it's about being where customers want us to be and not building it and they will come. So the philosophy here is changing, and for us, not one where you'll see fewer branches. You're going to see more branches.
Every bank executive has spoken to Moses in the recent past.
Yeah.
Even those who would say are retail heavy feel they're still underweight in that segment. And I'm very curious as to this issue of whether you're niche or scale playing, how Absa will really wiggle its way in that space, penetrating and unlocking new opportunities.
So first of all, I think it's clarity around where to play. If you read our strategy documents on the earnings cycle, and some of these coming through our annual reports in due course in the next few weeks, we're quite clear as a consumer business, we're very strong in the affluent segment. And this endowment, this is what we earned from our history and our legacy. And how do we make sure we absolutely win in that space is one strategic choice we've made. The core middle segment, which what you call the bread and butter personal banking, real opportunity to penetrate that core middle segment by differentiating ourselves. You see, today, in that space, everything is photoshopped. You know, you can copy a price, a product, a process, but the customer interaction, how you make people feel, how you reach people where they are, not the other way around, are sources of real differentiation. Then the next generation customer, which people like to call youth segment, that's not determined by age, source of income, is more about lifestyle and attitudes. There's a complete overlap between a hustle and personal income for that next generation customer. It's a micro SME who has personal income, who chooses to use those sources of income to do things that are different, that are not structured. And so making sure that using data and technology, we understand that next generation customer and build for that next generation customer is something we're thinking about. So I think, Julian, it's going to be about tact and choosing where to differentiate for scale and where to double down what we have. So it's very considered.
When you talk about payments, we are in an environment where we are seeing a lot of innovation in that space. Whereas banks are aggressively getting there, you look at the mobile money, for instance, change the landscape entirely. You have seen fintechs coming into that space again. So what's your strategy around payments?
So I think, first of all, it's putting into context what's happened over the last few years around the banks and fintechs or tech fins, technology companies intermediating banking industry. Scale players and incumbent banks have continued to significantly dominate their spaces. Fintechs are consolidating. When you look at where we are and you study the global trends around pools, fintechs capture about 5% of the overall opportunity in the market. That was zero the other day, so the revolution is real. But one that is not of a real strategic threat for incumbents who are thinking about building platforms to go after the hyperscalers on the space of payments, moving money around. Banks have been very good at lending money and saving money, but not so good in circulation and moving money around. And by the way, when you remove the whole payment space, there's very limited innovation in loans and savings. So this space allows us to do the less boring, to be innovative. And I know I'm just giving a general context here, but that's the understanding. The understanding is our competitive advantage, the sharp end of the franchise, is going to be around distribution. Because once you understand the flow of money and you're part of flow of money in ecosystems, then the data that comes with it allows you to do much more than what you can do with someone who gives you a payslip and says, here's how much I earn, give me a loan, or give me a mortgage, or help me insure. And at the end of the day, the way we think about this space is the end game. What is the end game, right? Everyday banking, which is an interaction with a customer, few seconds to make a payment, is very different. The end game is being invisible and hassle-free, applying technology there to be completely embedded and invisible in everyday banking. Investments and insurance, the interaction is a few times in a year. So how you get to a point where you have, what people would call perfect personalization, tailored solutions. Because interactions are not often, you have time to apply relationship management skills to build that space. And so I think banks are going to have to make very different strategic choices based on how they see the end game.
And speaking about the end game and the different strategic choices, if you read the National Payment Strategy, which was launched just about 2 or so years ago, which I read frequently because I think it really points to where banking in this market is going, there are discussions around neobanking. So whereas I might be an Absa client, my data should be available to Bank X and Bank Y simultaneously. We talk about the role of crypto, for instance, when it comes to disrupting the banking and payment space. How do you see those ones playing in, especially within the context of the national payment strategy?
I think, look, the reality is that some of those players will kill some banks, but some regulators will kill some of those players. Excuse me. But there will be an opportunity for closer collaboration. I think we continue to see neobanks getting to a point where when they begin to go up the value chain, they see the importance of incumbency and the advantage around compliance and regulation and licensing. and things like, treating customers fairly and what comes with conduct authority and those expectations. We see the future of money, as we like to call it, from the fiat currency, which is the one that is underwritten, backed by a regulator, moving into these spaces of cryptos. The technology behind it is something as a bank that we are looking into. The currency at the end is something that we are watching from the sideline to see how it evolves within the context of regulation. But I think it's going to be the long game. I actually think there will continue to be a benefit of being an incumbent who can, build some speedboats and allow them to go out in these spaces. But when they sense there's a problem in the deep sea, they can very quickly tank back in the tanker, which is the benefit and the advantage of the incumbency. There are banks that might choose to build their own standalone units that go into this space. There's some that have tried. We've seen the case studies there. For us, the clarity will come over time, but we think we found a path where we can do all of those things.
Okay. One of the key risk factors when you decide to go aggressive on consumer and retail side is the susceptibility to what this market likes to call regulatory overreach. Correct. So you have new taxes introduced on transactions. It changes significantly how the consumers will perceive how to engage the bank because of the implications on their wallets. Yeah. I know that one might be a little off your control, but as an extraneous factor which impacts your strategy, how would you guide yourself against it?
Yeah, so I think the first thing is that these things are cyclical. If you map the last 20, 30 years, consumer disposable incomes have mutated in a way, depending on the context, whether economic or political context that we are in. We think we are in the down cycle. Yes, we are seeing a lot of consumer stress, reduction in disposables. Volume of transactions are up, but value is limited. We're seeing that. At the end of the day, it's going to be about usage. We think that days are gone when someone said we own the customer or we own the customer's income. I think it's going to be about usage and which consumers choose to spend what where. Offering them financial services that allow them to use those services for us in a higher velocity or much more often than other players is going to be important. Yes, we will see elevated stress on portfolios, on consumer and retail portfolios, but they're cyclical. I think the strategic tact and the shift in this environment where we're seeing these transitory opportunities is short-term. Short-term lending, savings that are very much in-out to be applied in certain needs, looking at people's data in a different way, thinking about forbearance way before it happens and being proactive around that. At the end of the day, there's no business without a customer. Yeah. So for us, we are very clear that through this cycle in the consumer space, we need to be able to demonstrate we're coming along with a primary customer who, when this cycle is done, will be more capable of doing a lot more with the bank and so on and so forth.
I know you've spoken about going beyond the orthodoxy lending business for a bank, but I'd be curious, Moses, in your new assignment, where would you like the consumer book to be as a proportion of your total book as a bank?
Look, I think it's a lot more about where it goes and less about the share of total. Obviously, today it's 50-50 in terms of wholesale retail when you look at our numbers. We have a very solid, extremely competitive, market-leading institutional business. That business will continue to do what it must to grow in that segment significantly. We see the benefit of diversification, having a scalable consumer business. So the vision is less around what share of total of the existing franchise to how much can we achieve. We've said out there publicly, we want to scale our customer base. When you look at today and you compare today to last year, same period, we have 100,000 more 30-day active customers. And this is for a bank that has had 400,000 customers for decades. Yeah. So the speed of scale there is coming through. We think a critical mass in this space is crossing the 1 million mark of 30-day active customers. And that's a sizable scale and doing customer value management in that space as we got more value. So in all intents and purposes, the scale of the consumer business will be determined by how many people we serve, practically, safely, soundly, and the whole usage conversation around that. We think we'll get there in short order. And then in terms of, contribution to the bank will be what it is, but obviously scaling active customer numbers must come with the entire value on the profit and loss account. And that is only a growth conversation that we're having.
Trick question here. How much runway are you giving yourself before you hit the million mark?
Well, look, of late I've learned how to be steady. In my former role and this role, where it's 24/7, every day, every interaction matters. There's a lot that comes along the way. But look, I think we'll get there in due course. We're seeing more customers choosing us for who we are. We've repositioned the brand in a big way. With this notion that people don't think about banks as banks and bankers would like to think they do. We are a very small part of consumers' life. So your story matters begins to bring that component that we are as Absa as a by the way in a broader scheme of people's life. And that's a very emotive space and drives the right sentiment. We see this brand as a real competitive advantage, as a pull factor. It's creating the right sentiment for us to create the propositions we need. Fulfillment through distribution is intact. And then what we do after that with customer value management for the benefit of the consumer is important to us. So the core capabilities, we've invested big in data and insights over the last few years. We have a chief data office that has been there embedded in the business. So I think the immediate milestones is to set these capabilities in place. I'm only 90 days in my new role.
One quarter
and so, returns. 1 quarter to far returns. So hopefully you'll see our first quarter results and we can pick a conversation there. But all to play for.
Okay. How much is the new focus on retail augmenting on the fact that you are simply building yourselves as an all under one roof? You are back to the custodial business, you now have asset management and a couple of others. How much is it augmenting onto that?
So our business structure had stayed very much in a perimeter wall for many years through the change and transformation period that we talked about to now where with the capacity to build new things and dialing down on other areas is just the next phase of building out the franchise. So we think the whole notion of being a holistic financial services player, looking at symbiotic adjacent businesses. I look after the consumer business, which has got adjacent business of insurance and investment. When you look at, as I said, savings and loans, moving money around, insuring and investing, these are symbiotic in nature. The opportunity to cross-sell these new businesses into what is existing is important. So that over time, the innovation is a combination of how much new you're building vis-a-vis how much you're dialing down over time. And so it's really part of the plan. And then complementing that with new build-outs on the corporate and institutional space, around the custody space, asset management space. These are new businesses growing in multiples. Tells you there was a need. We could leverage our existing base to cross-sell. And getting the product and the capability was about hiring new people into the organization and getting licenses around it. So I think truly there continues to be a benefit to be universal and to be a scale player. And that's the choice we've taken.
Okay. As we wind down our conversation, Moses, one thing that a number of executives in the banking space have told me is that the challenge with what you call the next generation, or the youth demographic, as many others would call it, is that there are no loyalties.
Yeah.
There's no stickiness within that demographic. Yeah. Today I'm with Bank X, tomorrow I move to Y. How do you position yourself within the context of those realities?
Look, I think, Gen Z is loaded fully. I don't think they're loading anymore. It's loaded fully. And you understand and you learn, for those banks and financial services who did this in the prior decade, where the thesis was simple. Bank young people, offer them almost everything for free. And then as they get up the value chain into like over 18, 21, first job, you introduce a fee component for the economics to work. That's a fallen flat because, you've conditioned a certain way of your offerings. and you realize the next big thing is the next free thing. And this is the right of every consumer to look for value. So the whole customer lifecycle management has completely changed. And so our notion is not owning the segment or owning a customer in the segment. It's how much we have to offer them. And through that, how much do we understudy and understand in the ecosystems they play in. Young people today will tell you, and hopefully you're young, that they really enjoy spending time on the internet on the unserious stuff. So you've got to be there as a financial services player to understand what is this unserious stuff. Yes. Is it some form of gaming? Yeah. Is it a community that has loaded together? Is it a group of people running a business? What are these interactions? And how do you embed yourself in those interactions? So much so that every interaction that you see in that segment, you're embedded. And not waiting for a 10-year-old to become a 21-year-old to earn a revenue from them and build a business case around that. So, and hence the reason we say next generation, the next generation of consumers. And make no mistake, this next generation of consumers will begin to consume the structured financial services. They'll need a car loan or a mortgage, right? And so you need to have understood their behavior. If it is one of where you're going to make a commercial value, I think maybe that will be difficult to do. If it's one where you're going to try and understand the ecosystem and what's around this next generation customer, so you can understand your business much better and how you position in that space much better. Do you know young people care more about wellness than we think they do? Right? Yeah. And so therefore being able to say, we have built a community for you that allows you to have people to lean on and talk more than just about finance. Could be a competitive advantage for a financial player in that space. We did a survey the other day, around 500 young people who we had taken through college and through wellness and through money skills. And we asked them, after 5 years of coming out of that program, who do you think is the most consequential financial player on the continent? They said Absa, not because Absa gave them money, but because Absa helped them understand life and life skills.